Hey, what's going on? James Daniel here to help you make buying a home in San Pedro, California simple. And today I have the next video of the Home Buying 101 videos, which is going over these steps to buying a home. And in this video, we're going to go over the 5 steps to obtaining a mortgage. So I think this is probably one of the most important videos in this series. And I've had some other videos that you can see on my channel where I've interviewed lenders going over different questions about types of loan, pre-approvals. This is just something that I wanted to talk to you about each steps of the process when you are to getting a loan. One thing I wish I would have done, and as you've seen in my different blogs and my different videos, it took me about 3 to 4 years to get to the point to save to buy my first home. And I really wish I would have took the time to speak with a lender beforehand to see kind of where I was at that moment, and then potentially where I wanted to be in the future, right? Different types of houses I may have wanted or things like that. And then taking that overall price of stuff I wanted to, figured out what that monthly payment was. And then I had my goal to save up to, but I was just so gung-ho on buying a house in California that I was just like, I know I need to save money, and that's it. So I think this video will help you no matter where you're at in the stage of 3 years out, a few months out, to really understand the process leading up to buying a home. So if you like this video and other videos in the Home Buying 101 series, please feel free to hit the like button. If you like this channel and other videos that I'm putting out, please feel free to hit subscribe to get those videos as soon as I put them out to the YouTube world. Let's get into it. Step number 1 is evaluating your affordability. Now, I think it's key to go into your meeting with the lender, tell them how much you can afford instead of them telling you how much you can afford. When you're going up to meeting them, obviously you're saying, hey, I want to afford X amount per month, and let them tell you can't afford that instead of going the other way around of like, hey, here's my paperwork. How much can I afford? And they're like, you can afford 10 grand a month, knowing in the back of your mind that you can't afford that much money per house. So I think the best thing to do, and you can check out the other videos that I have, but I'll put the links down below, of working backwards to figure out how much money you feel like you can afford per month when you are taking on this home. So I think that will be a key thing that will help you save time in your home search. So when you're going out to open houses, when you're looking on Zillow and things like that, you'll know exactly the price range which you fall in instead of looking all over the map at homes that you probably can't afford. And you can, obviously go a little bit higher than that if you see something in your market that you might like when you're working with your agent that you might want to go see. But I think it's best to determine your affordability so that you're able to get a more realistic view of what you can afford and what will work for you. So step number 2 is shopping around for lenders. And lenders out there, please do not kill me for this, because I know, you guys go through a lot of different buyers who are in and out, but I do have it later in the video that you need to be respectful to the lenders that you do work with. Even if you are shopping around because you're trying to find the best scenario for yourself, which you should do, you still need to be respectful that this is their job. It just says you have a job, but as I mentioned before, you need to find out the best price for you. So with that said, I think it's good to talk to a few lenders, because different lenders may have different loans that they may be more familiar with or work with more often that may be better for your fit scenario. You may need an FHA loan, you may need a conventional loan, you may need some other type of loans like a bank statement loan, or if you're a move-up buyer or a downsizer, you may need a different type of loan. So working with a different lender who is more familiar with those may be helpful for you when you are going through this process. They may be more familiar with just some local programs in the specific area that you're looking to move to. So making sure that you talk to different lenders in that area outside of just one who covers the full US may be a good option for you as well. When I was looking to buy my home, I literally had an Excel spreadsheet that had like Chase, Lender A, Lender B, Lender C, and lined up everything that I could get as far as what expenses it was for those loans next to each other, so that I was sure that I was choosing the right person. The very first lender I met with was an excellent person to talk to and gave me really good examples of just how this process went through, similar to how I'm going over with you now. Spoke to me about when you're buying your house, you need to make sure this is something that you want to drive up to every day, not just being like, oh, in 10 years from now, this will be good. And we had great conversations about buying my first home, but when it came down to locking in that rate, he wasn't the best rate, even though he was probably the best person to talk to. So you need to get out of your feelings a little bit when it does come to shopping for this loan, because after you lock this in, you're probably not going to talk to that lender again until you potentially refinance if the rates do go back down a little bit lower. Now, with that said, you do want to make sure you are working with a lender that you're able to work with. You don't want someone who's rude or talking down to you just because they have the lower rate. I mean, if you want to go that route, that is, but if it's close, I would go with the person who seems like they're capable of getting you to the pre-approval to the end of getting into your house, because it could be a hassle, and this is a journey when you do go under escrow. So consider these things when you are choosing a lender and when you're shopping around, and do your research. You don't have to go into so much detail as I did with the Excel sheet, but do your research, evaluate the pros and cons, and move on from there. Step number 3 is evaluating your mortgage option. Now, I think this is key, other than just going on the internet and saying, oh, conventional loan or an ARM. I saw that, that sounds like me. That sounds like my situation. I really do think that meeting with a lender, or even with a real estate agent in the buyer's consultation, if you're meeting with your agent before you're meeting with your lender, and getting a good idea of what mortgage might work for you. And by giving that agent or your lender your information, they might say, I think a conventional loan might work for you because you have enough to put 20% down, we can get rid of PMI. Or, hey, you don't have enough for a conventional loan, so I think FHA might work best in this scenario. Or, you are self-employed and all you need a bank statement loan. So, hey, you're working with that lender to be able to get more information about a bank statement loan. So I think discussing with a lender early or even your agent in that buyer's consultation as early as you can, to be able to understand the different types of loan products and which loan product works for you. So getting that knowledge earlier than later when you're working with an agent, and then you got to pre-approve. You're having to get a pre-approval and get all this weeks before you find the house you love is way too late. So the sooner you do this, the sooner you have a better understanding of what type of loan works best for you, it will make the whole process go so much smoother. So step number 4 is submitting the loan application. Now, at this point, you may or may not have chosen the lender that you want to move forward with. We'll just say in the scenario, you've probably chosen lender at this point. I'm gonna go with this person. So they send you a loan application link. You fill out that application. You give them the documentation that they need to be able to decide how much that you can afford. And remember, part of this information you're handing over is telling them how much you can afford per month. So then after all this information you give them comes back, they then give you your pre-approval. And this pre-approval, as we have talked about before, will tell you the amount that bank or lender or whoever you've gone with determines how much money that you can afford and able to buy a home. Now, you're going to want to go through this process, and like I said, it's sooner than later, so that you're able to, if you see a house tomorrow and you want to put in an offer, you're able to use that pre-approval to show the seller, like, hey, I can afford this house, and you're able to submit that with your offer to hopefully get the escrow or to go under contract to get that whole process started. So if you're working with an agent, they should have this process done right after they meet with you in that initial buyer consultation. But you want to get this done earlier and often for a few reasons, like, you're not going out and just looking at houses that you can't afford, and that when you do find something that you like, that you're able to submit an offer and have a pre-approval that says you can afford this house. So definitely something that I think is probably one of the most important pieces in all this, so that you're knowing that you can afford and that you're able to move on to the next steps, which is going under contract on your soon-to-be home. So now you have your pre-approval, you see the house that you love, so you're ready to go in and put an offer, and it gets accepted and you want to go under contract. At that point, you probably want to lock in the rate that lender has given you. It may differ depending on what has happened in the market, but you're going to want to lock in that rate. So you're like, hey, if this rate is hopefully 5.5%, I'm locking in this. So if this deal does go through, that's going to be the rate that I stick through. So once you have that offer, it gets accepted, you're going through this process, you're going to have an appraisal done, which the appraisal will tell you how much that house is worth. So as long as that appraisal is same amount or lower than what that pre-approval is, and you get to the end of this process, and after all of the underwriting, you're able to lock in and everything goes through, you should be okay. If that appraisal comes in, let's say, higher than the amount you're approved for, that can be a problem because you may have to put some more extra money in, or just have to go to the next house. But at this point, you're able to lock your rate in and be able to get your house and move on from there. Now, I hope this video helps anybody who's on this journey, whether you're a first-time buyer, a move-up buyer, or downsizing from your house, your big house, to your smaller home. I have plenty of other videos about the different types of loans, the pre-approval process that I'll put links down below. But I just wanted to do this overall video to help you understand the different steps of obtaining a mortgage, and just give you more clarity about how important this is if you are on your journey to buying a home, to be able to understand how much you can afford. And like I mentioned before, one thing I wish I would have done is done this sooner, then later. So I could have really built a plan out, you know, in year one of planning, built a plan out to where I wanted to be instead of in year 3 or a few months before buying the home. But that's why I'm here making this video, to help you guys. So once again, hope this helps you guys out. If you have any questions, please feel free to call me, email me, and I will get back to you as soon as I can. Take care. Enjoy the rest of your day. Ciao.